Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for October 1st, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.75 rose from 1.21 last week, advancing further into bullish territory. The total count of securities in bullish or bearish patterns decreased slightly to 2,949. The count of bearish stocks decreased 20%, while the count of stocks in bullish patterns increased 16%. The Pirls PNF market breadth summary chart shows us a market now 5 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces required and click Subscribe. The well-known market breadth summary chart, the Nasdaq McClellan Summation Index, rose 171 points for the 15th advance in 23 weeks. At a positive 491.14 points, it has risen above the February 2017, December 2016, and May 2016 highs, and continues above the July 2017 high, and continues below the two remaining tops above plus 100, and all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend is now at a positive 142.38, up from a positive 28.36 last week. At Tuesday, 9/26 close, the CCI 20 daily was within the plus or minus 50 range for a zero-line reject long entry signal at Wednesday's close and Thursday's open. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 74 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly has fallen to a positive 119.54 from a positive 127.77 last week, after forming a zero-line reject long entry signal for Tuesday, 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: oil services, oil, KBW Bank, brokers, and disk drives on top. Gold and silver and REITs on the bottom. Bullish, KBW Bank, and brokers continue in the top 5. Disk drives has entered the top 5. Gold and silver continues in and leads the bottom 5. CompTech and computer hardware have left the bottom 5. Bearish REITs continues in the bottom 5. Focus this week from www.zerohedge.com. Eric Peters on tipping points. It all worked incredibly well until it blew up. The following are some key points. 2 years ago, long after we first suggested that the transformation of VIX from a measure of implied market volatility to a reflexive instrument that can be traded, and thus influence the underlying assets whose volatility it was supposed to measure, allowed the VIX to serve as the fulcrum security for broad asset manipulation. First the FT, then the WSJ confirmed what we said, namely that pervasive market manipulation was not only possible, but took place on a regular basis, courtesy of the VIX. See conspiracy fact: VIX manipulation runs the entire market, and another rigged market. Scientific study finds systemic VIX auction manipulation. When a measure becomes a target, it ceases to be a good measure, said the Englishman, stepping outside of himself. That's Goodhart's law. Charles Goodhart observed that central banks measured money supply and found certain M1 growth rates to be optimal. But once they targeted that optimal range, M1 lost its value as a measure. Market and economic actors adjusted their behavior to game the M1 system. So central bankers shifted to M2, then M3, and M4. Quote, investing is obviously not a science, but if it were, we would say that you can't act on something and observe it at the same time, end quote. French colonialists discovered this in rat-infested Hanoi when they offered a bounty for killing rodents. To receive the reward, the Vietnamese were required to produce severed tails. Soon thereafter, tailless rats scurried throughout the city. The bounty hunters removed their tails and released them to the filthy sewers to breed, boosting their bounty. Quote, today's greatest example of Goodhart's law in action can be found in volatility markets, end quote. The VIX index measures the expected volatility of the S&P 500 and is calculated by multiplying expected 30-day variance by 100. As a measure of market fear, it was quite useful until it became something that could be traded. Quote, the sheer size of outstanding positions in VIX futures, VIX options, ETFs, ETNs, and bank volatility selling programs is such that those trading these markets can no longer separate the true measure of volatility from their own actions, end quote. Or, said more simply, low volatility is no longer a description of a market state. Rather, it is a characterization of the one, and perhaps only, trade strategy that has the explicit blessing of central banks, who themselves do everything in their power to crush volatility. Speaking of tipping points, here are some further observations from Peters on this topic through a curious look at unexpected feedback loops involving cobras in India. The British Raj grew concerned by the abundance of venomous cobras in Delhi. A reward was offered for every dead snake, and in they slithered, one by one at first, then in baskets, barrels. Our strategy has proved a great success, announced the Raj, yet still the number of captured cobras swelled. You see, the breeders had entered the business. When Raj learned of this betrayal, the law was abruptly abandoned, and the captive snakes, as worthless as they were abundant on a scale never before seen, were set free, coiled throughout Delhi. And finally, through the imminent folly of the Swedish central bank, quote, "The objective of monetary policy is to maintain price stability," end quote, declared the Sveriges Riksbank Act. Stability is defined as 2% inflation, itself an oxymoron. Quote, "Sustainable growth and high employment are to be supported," end quote, says the Act, though they're of secondary importance. Inflation is now at the 2% target, a consequence of overnight interest rates at 0.50% and central bank bond buying, which weakened the krona, sparked positive 5.3% IP growth, positive 4.1 services output, unprecedented real estate speculation, and surging consumer debt. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.